So today in this video, I want to show you guys my most effective superpower. It's called trading metrics. See, data analytics is the main way for you to become a consistent, confident trader. See, before I was a day trader, I worked in a lab and I studied 5G antennas each and every single day. I worked for a research and development crew, and what I had to do every single day was test product. I had to find out if it worked, in what conditions, in which environments it worked well in, and which ones it didn't. And I couldn't just figure out how they worked. I had to figure out a super simple and effective and repeatable process that we can use to teach the operators so that they can manufacture 1,000 of these antennas a month. See, what this did for me was help me on a way another basis realize there's two battles we need to fight. We need to fight a way to obtain our goal, and not just a way to obtain it, but a way to teach others to retain the knowledge and the information in the system it takes to massively produce whatever it is you're trying to build. So today in this video, I want to show you guys, right, a way and a system that I use to understand if my edge is still working. See, a big issue most traders go through is assumptions, and assumptions will get you killed. If you assume that that driver's going to slow down and you're just going to pull out in front of him, that could get you killed. If you assume that you can eat the way you want, not go to the gym and not take care of yourself, that can get you killed. If you assume that your strategy is still working and that you can trust it and rely on it, and you do not do the proper back testing, you don't collect the data, and you don't analyze it, that is going to kill your chance of developing consistent results. So in this video, I want to show you guys a way I do this and build the confidence, control, and conviction that's needed to become a consistently profitable trader. So very simple. I thought this would be a great way and a great exercise for us to go through the month of September and our edge. So during the month of September, you're going to see here, and once again, let's go back a second. Anytime you're developing a system, you have to become extremely clear on what your your required specifications are, right? This is your criteria. You have to become very clear on what it is you're looking for, right? See, we operate day in and day out with many biases. And what biases are is when an individual has a very strong preference for something without or regardless of its merits. See, that is like us just assuming this edge is going to work because the guy we watched on YouTube could speak well, right? That sort of behavior will get you killed. You literally need to dive into your edge, into your strategy, debunk it, flip it around, see if it works in this environment, see if you change this, if it'll still work. You literally need to read it inside and out and develop and determine and deliberate a very good way for you to repeat it each and every single day. So our required specifications, very simple, is we're trading off open print or a critical level. This study, I focus more on the morning, so you're going to see much more trades go off open print, but you must be trading off a pint number, right? A critical level, a previous day high, low, open, or close. Second set of criteria is the moving average cross, right? This is with the 5 and the 20 EMA. I also trade with the 50. You're going to see the 50 in most of these examples, but the main primary focus of this exercise is the 5 and the 20, which is the EMA cloud that you see before you. Our entry criteria is an RBI or a GBI. This stands for red bar ignored or green bar ignored, right? This is us getting in the market once we see the shift, and then we put our stop above the previous candle. And then we have a very specific time frame on this strategy. It's before noon. We're more focused on trades before noon. That's not to say there's not great trades after noon. It's just in this study, we're being very clear. We're defining our specific environment, which is it's before noon. And then required price movement is it must move at least $1 in our direction. I thought $1 was very suffice to determine a profitable trade. So out of 18 trades in the month of September that fit this study, that fit these requirements, 5 of them were not profitable, giving us a 72% win ratio on the HPT crossover. That means 7 out of 10 trades would have made us money if we repeated them and we executed them the way we were supposed to. This is the most important part of trading. Let's go back to building antennas. I can show a simple process to somebody, but if they cannot follow it, the process is useless. You can have a beautiful road in front of you, mapped out on how to get to your destination, but if you take the car off-road in the dirt, I can't guarantee you'll get there. See, the process is only effective if you can repeat it. Hesitation is one of the major stakeholders in why traders cannot see consistent results. And if you have or are experiencing hesitating, you have to do an exercise like this. Exercises like this devalue hesitation every single time. You have to put the reps in. You have to become more familiar with what you're looking for. You have to get very specific. You have to learn to articulate it, right? This way you can see it, you can identify it, you can be comfortable with it, you can become familiar with its uncertainty, right? Because there's no edge out there that is extremely certain, right? We're right here. We have a strategy in front of us. That's phenomenal. 72% win ratio is phenomenal. If you can demonstrate a 1-to-3 risk reward on this strategy, you will make tons of money. You do not need a better strategy. You just need better risk reward, and you need better execution skills, which is why we are doing this. So 5 out of 18 of them were not profitable. There's an example below. You see we got open print. You have price falling below it. You get this HBT signal, right? This is our indicator that our team has. It comes with access to Trader Bootcamp. Price falls below the 50, comes up, retests open print, and we get a glorious move to the downside. Okay, so first trade, 9/5/2024. We are getting open prints established. It's right there next to end of day. End of day is that gray line, right? So buyers show up here. We get a very nice move. Look at that retest off open print. That is beautiful. That is absolutely beautiful right there. But that did not fit our requirement because there was no HBT cross. Okay, so once the cross did happen, I want to point out here, notice the healthy trend, right? I'm always saying that. What am I talking about? You do not want to be entering a continuation chart pattern. You do not want to be trading with trend if the trend's not healthy, right? How do I determine that? Well, I use that blue line right there. That blue line is the 9DEMA, double exponential moving average. It's very tight. It serves me extremely well. If we get extended from this, I do not enter the trade. I wait for it to catch up to it, and I enter when we are next to the moving average. Very nice trade. Beautiful move here from EOD down to the next critical level and below. Next, we have open print established right here. Price sells off below it, and into end of day, we're getting weakness here from buyers. We're getting strength from sellers. Price rips back up into open print, rejects, falls below the 50. Beautiful move. Very beautiful move. Next, we have open print here. Open print's established at 544.02. Price rallies above it. Notice here, buyers are breaking into it but cannot close below it. This is why I love data. Every single principle, concept, video I've ever made, any lesson I've ever spoken and shown you guys came from me analyzing data. Every single day I collect data. We have been collecting data for 2 years on the Discord, right? So anybody that's on my team gets access to over 2 years of trading data. And not just random trading data, very clear, specific, determined, defined edges and strategies that I execute on every single day, right? This is where I collected all the data for the month of September. Look at this. This is just with the HBT cross. This right here is with the gap fill, right? So if you come over here, you're going to see over about 2 years of trading data of gap fill strategies, what I was looking for, right? Specific requirements, why I took this trade. See, data is your missing link. If you are not trading the way you want to, if you're not getting the results you want, it's because you're not trying hard enough. You're not studying the data. You're not obtaining and retaining the data. You're not sifting through the data. You're not developing strong, simple, but effective procedures and processes and systems from the data. The data is your lifeline. It is your superpower. We get the beautiful cross here. Price falls below the 50. We come up. We retest the critical level. Healthy trend. We sell off gloriously. Great setup, right? Another one. Let's get here into a loser, right? I want to talk about a losing trade. All right, this was a losing trade. Now, I'm going to tell you here, right? And this is, once again, why it's very important to be very clear when you're sifting through your data. So we have open print established here around 555. We enter the market long. We get the crossover here. Let's see if I can zoom. Here we go. And now price goes in our favor. And it goes up actually about $1. So this one could have been a winner, but I still want to talk about it. Now, the reason I deem this one a loser, I entered the market long above the 50. I got in this trade around 555.20, and then price rallied up into 556, but it did not reach the dollar requirement. I did not take profit when I was supposed to. Instead, price rallies down all the way down to my exit, which was right next to end of day, and stopped me out of my trade, right? This happens often, right? But just because it happens doesn't mean our strategy doesn't work. It just means we need to be extremely ready to get out of trades when we're supposed to, right? The great way I should have done this is once we got above previous day high right here, I should have put my stop loss right below it, which is what I did. I brought my stop loss up right below the EMA cloud, and you're going to see we fell below it, stopped me out of my trade. That happens. Can I control that? Absolutely not. I can't control that. The only thing I can control is my very simple, clear, and well-defined entry and exit criteria. What it is that constitutes my edge. That is what I can control. I can't control massive liquidity snag below previous day high right here, right? But I still log it as a loss. It's still very important for you to understand that, right? There's going to be non-contributing factors that cause you to take losing trades. You have to be okay with it. You have to be ready with it. You have to expect it. This is the stock market, right? We are literally trying to become multimillionaires. This is it's not going to always be easy. You have to accept that and put it into your win ratio. Next. That was a really good trade right here. Once again, off the open, closing above the 50. Notice here, when the cloud is small, right, it goes from red to green and then opens up. See, what I'm doing here is looking for familiarities, right? Looking for things to become familiar with. Looking for, detailed, flavorful examples and graphical representations of what it looks like to see healthy trends. Buyers taking control, developing and defending certain critical levels, defending the moving averages, almost like it's a battle. That is the way I like to trade, right? Because the more detailed it can become for me, the easier it is for me to execute it, to hold on to it, to identify it. This is how I become more confident. This is how I become more controlled. This is how I become more convicted and competent in my actions, in my behaviors, in my thought process, my critical and logical and rational thinking process. All right, another losing trade. Price rallies above the 50 here. Let's zoom in on this one. So price rallies above the 50. We get a very large move up. Price comes down into the 50. We take the market long. Why was this? Or let me rephrase. What's one key takeaway I can take from this trade? Because all my criteria is there. I'm getting the moving average cross. I'm off the critical level right here. Open prints right here at 56175. We got a nice retest of it. But look at the trend. Is this healthy? Is this trend healthy? Is it a orderly trend? Is it a trend that you can expect to continue the way it's supposed to? Absolutely not. Why? Look at how extended we were from our blue line. Once again, this is why becoming familiar with certain factors and concepts in graphical presentations is going to serve you so well. If you get extremely extended from a moving average, do not enter in that trend. Do not follow that trend. If you are extended, wait for price to pull back, wait for the trend to become healthy, less chaotic. If you're entering chaotic trends, you're going to get chaotic results. Look it. It literally happened again. This is what I call the snapback. Price rallies super far away from the moving average, snaps back into it. Notice here, once the trend smoothed out, if you followed this strategy and longed, I'd say right here, got in the market long, you would have captured a phenomenal trend, a phenomenal trade. So the key takeaway from these losers, there's already been 2 of them, is I entered in off unhealthy trends, right? So this is something we would write down. This is something that we would look to retain for tomorrow and next week's trade. This is something we may add into the entry criteria. Only healthy trends. See, this is how I developed my process. Very important. This is literally a superpower if you could learn to do it. Let's see here. What else do we have with losers? Okay. This is another one. This right here, we have open print established. We get the moving average cross. I'm talking about this candle right here, closed below the 50. That's where I would have entered the trade on the retest of the 50 here. And that's where I did enter, and then I got stopped out of this trade. Is there anything about this trade off this chart that we could have seen? And if you ask me, I don't see anything. I do not see anything. That's not to say there isn't anything. If you guys see anything, drop it in the comments below. I'd love to hear it. But there's really nothing else here that I could have changed or seen, in my opinion. We're also getting a lower high, right? It's definitely bearish. But once again, that's just how it works sometimes. To be a little more detailed, I believe we were trading around the all-time high area, and that's a very volatile area. So this makes sense. And once again, you're not always going to be able to understand or determine what is going to happen. I don't care how smart you are. I don't care what your IQ is. I don't care how much data you collect. Sometimes it's not going to work. And that's fine. We do not need it to work every single time. Just like playing poker, or I'm sorry, blackjack, professional blackjack card counters. They don't rely on every single hand to be good. Instead, they bet big when the probabilities are in their favor. That's exactly what we must do. All right. Let's see if we can get another loser. I like talking about the losers. This was a good one right here. Wasn't a losing trade, but we fell below the 50. We got the crossover. Great move in our favor there. I took this trade. I took 50% of my position down here and stomped out of the rest right here, right? So definitely a good trade. But once again, that's just how it is sometimes. This was a beautiful trade. Open print, established here, rips up into the 50, right? Price comes down below open print, retest open print, get the nice sell-off. Say you missed that, well, you could have captured a beautiful move back up to open print here as well using this same criteria. All right, here's another loser. Open print's established here. Up here, price rallies down. I take the market short. One thing here I'm noticing is I didn't really get a retest at open print. Didn't really define a battle, that flavorful price action off the volume liquid area. So that's something also I'm going to take into account for next month, right? Don't trade unhealthy trends and make sure you're watching that battle happen off the critical level. Sometimes you get it, sometimes you don't. So I'm not going to get super, I'm not going to change the whole process over it, but I'm going to take it into effect, right? I'm going to take it into consideration, and what I'll do is jot it down. So if I start to identify a repeating pattern here, then maybe I'll change my strategy. Maybe I'll implement a new step. Maybe that step will be I need to get more retests at the critical level. I'm not sure yet. Very good move right here. This one's beautiful. But once again, right, and this is probably our last point that I want to talk about here. Yeah, Josh, this looks great. But to have successfully made money on this setup, there's a few things I want to point out. And you have to be ready for this, because look at the trade before it. I remember this. The trade before it was a massive sell-off, and it happened very quickly. We were getting extravagant and excessive selling in the first hour of the day. Now, on this day, we fall below the 50 right here. We come up, we retest open print. I take the market short on this candle right here when we wipe out the bottom of this green candle, right before it, around 571. Now, my stop loss had to be above this candle, right? So that means I can't stop out of the trade until price gets above that candle. So that means I would have had to hold for 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55 for an hour before seeing any real profit on this trade. Where the trade before it happened immediately. In the first hour of the day, it was 100% ROI. But this trade, the first hour of the trade, and I'm still in drawdown. See, this is another reason why collecting data is so important, because it reminds you that all trades are different. Some trades are immediate profit. Others, you got to wait an hour before the move materializes in your direction. This is a very important concept that you must wrap your head around, and you must hold dearly to your logic in your decision-making process. Just because I was in this trade and I was up 20% on this candle and now I'm down 20%, that doesn't mean anything. That just means the market is still materializing and I need to let it do its thing. Another good trade there off pre-market. And this one, right? This is a good one to talk about here. This is how I use the 50 EMA, right? This is how the 50 EMA serves me very well, right? Because notice, we can't close below the 50, so there's no trade. Until I close below the 50 or get the crossover, there's no trade. You can see here we finally got that later in the day where we ended up letting the move run. So guys, key takeaways from this video. Data is extremely important. Why? Because it helps us refrain from acting on bias, right? Biases, once again, are when you have a strong preference to something without focusing on its merits. We just went through an exercise. We weren't able to dive into every single trade, but we just went through an exercise where we dove deep into the losers and most of the winners of the HPT crossover, right? It yielded us a 72% win ratio over 18 trades. 15 of them were losers and 13 of them were profitable under those requirements. But what I wanted you guys to really take from this video is the importance of obtaining data, retaining the knowledge you get from it so that you can determine and implement a process based off objective truth. Objective truth meaning not what you think, but what the data is telling you. It's very important. This is how you develop the confidence, the control, the conviction that you need to become a much more and successful trader. I hope you guys enjoyed this content. Make sure you hit a like, subscribe, do all that YouTube stuff. Share it to somebody that needs it. Watch this video back and forth. Look at how I identified what it is I was looking for. And do me a favor. Develop criteria that is yours, not just mine, but yours. Sift through the data. Develop and define a super systematical, repeatable approach and repeat it. Continuously collect data. Continuously become a better trader. We do this constantly over here at High Performance Trader. Guys, if you want access to the team, click the link below. Join Trader Bootcamp. Come trade with a team that is focused on developing the absolute best process possible. Focus strictly on execution and making decisions off the truth. I love you guys. I'll see you in the next lesson.